Bitcoin back at $60,000, and it is indeed getting interesting back in the crypto markets once again. So in today's show, we're going to have a look at how the window of opportunity is beginning to close for the next move in the crypto markets and how you can adequately prepare yourself. We have a whole lot of alpha in today's show. Smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into it. We did see a bunch of liquidations coming into the market, $102 million worth of short liquidations in the form of a bit of a short squeeze, right? Pushing up towards that $60,000 level. And as it currently stands right now, you can see that we have 51.26% of market participants currently opening up longs, with 48.74% of the market still in the short positions, which could mean that you could get a bit of a higher squeeze towards the upside, but we'll go through all the various different levels, the validation and invalidation levels. If we look over here at the banter bubbles, well, it's looking pretty decent, right? Hourly pulling back ever so slightly, but the dailies are looking really, really strong. Pretty much most of these coins over here putting in double-digit gains in the top 100, and the weekly, same thing, right? Double-digit gains over there. Monthly, remember last month, this was super, super red, everything starting to turn back up, and then you still have on the yearly meme coins running the roost, right? With Mantra being the only real-world asset over there. That's one of the major outsized bubbles. And the question is, will Bitcoin follow the trajectory of gold, right? Because we've seen gold in an absolute massive cup and handle formation over here. You can see, and it has broken out already, right? You have the cup over there, you have the handle over there, and the breakout. We can actually work out the measured move. This is based off of a trade that we actually took in whale room. So we were looking at this over here. If you measure from the breakout point over there of the handle to the absolute top over there, that's going to take gold up to about 2,776, which it's currently in a very, very powerful candle, leading to about another 7.84% towards the upside. And this was an actual trade that we took, right? So there it is. That's the trade. We did drop that in whale room. There it was. We dropped this in whale room all the way on the 14th of August. So 2 months ago. It's taken a little bit of time. Remember, gold doesn't move as quick as what you would expect with crypto, but nevertheless, you are in profits. And because these are highly leveraged trades, this is very, very, very big profit. So if you have taken this trade, remember, stops go to break even or slight profit. At this point, you could actually shave about 1/3 of your profits if you are in whale room and you actually took this trade with us. That would be exactly, well, that is what I have done. And I'm going to leave the next 66% to run towards the top over there. But the question is, will Bitcoin follow this trajectory? Because if you do look at Bitcoin, it is coming off a very, very low volatility right now. We started to get slight expansion, but as long as bulls can defend price action throughout September, which has been what we've been looking for, that's been an important at least sign that we want to see, that bulls can at least hold up without breaking down in the month of September. And then we know that the fourth quarter, seasonality wise, is pretty bullish for Bitcoin. October, November, and December, we expect to see the best returns, especially in a post-halving year, as soon as the halving cycle is complete. So we're expecting recontraction on the BBWP volatility indicator over here, and then it should start to spike back towards the upside as this breaks out. And you can see also perfect cup and handle formation, beautifully demonstrated on the line chart, looking to flip this key level. Now, the breakout of that would actually take Bitcoin just shy of $108,000. So it's $107,000 region. That is going to be the target level over there. And remember, risk, when it returns very, very quickly. You can see the crypto fear and greed index shooting straight back into neutral territory, now at 50. That is how quickly risk comes back into the market. As soon as you start to take out some of these key levels, the most notable level that we gave was $65,000. That would be a high time frame break of structure, and then you would look to buy the next higher low, and that could be the very, very start of the breakout of this at least recent downtrend of low lows and lower highs, also breaking you out of the handle formation of that cup and handle. So that's what we're watching over there. Currently coming straight into resistance. You do have to be cognizant and aware of that. This is again just giving you the weekly time frame using the 21 weekly exponential moving average. You can see that wick straight into resistance, starting to reject. It all depends depends on the weekly close. If we can start to close this candle above these levels over here, that's where you'll see the sentiment shift very, very quickly. And then, as mentioned, risk returns really fast when you get above the $65,000 level. And that's where people will start to have those $100,000 price targets. You'll see how fast the retail come back into the market as soon as you cross above $100,000. We understand and we know right now, retail are not here. Well, only the smart retail, right? You guys that are here watching live right now, smash the like button. Big ups to you guys for being here each and every single day. This is why you'll form part of the top 1% of the traders and investors out there who actually keep the majority of the gains that they make throughout the cycle, because you stick it out and you've been here from beginning to the end. That is what's required for success, right? Is commitment. We'll have a look at a little bit of, I'll show you a chart towards the end of this as well, in terms of showing you what success looks like in this market, what it actually takes to be the best of the best and to succeed. And believe it or not, it only really requires you showing up and being here each and every single day. So here's our chart patterns. This is taken from the Whale School course. Proud to have taken about 70,000 people through this course. If you haven't already done it, please do join. There's a link in the description below. Let's actually quickly just see how many days left are there to join Whale School. Well, if you go through here and you click on that link, there we go. Click on this link over here. And let's pull that across. So you have 11 days left to join Whale School. 11 days left to join Whale School. 5 hours and 11 days. Click that over there, sign up, because I do teach all of this over here. So this is in terms of the chart patterns. There it is. Get started, sign up. All the spots are still available. We're looking at the cup and handle over here that broke out on gold. We're looking at the same thing occurring on Bitcoin. And then on altcoins, notice there's going to be a lot of falling wedges right now because altcoins typically lag. We'll also look at when the much anticipated altcoin season may actually take place. So here you have the falling wedge. Remember, once you break out the top side of that falling wedge, it is bullish. And you can also view that, essentially this handle formation of the cup and handle sometimes also can be viewed as a falling wedge or bull flag as price compresses into that lower boundary and then later starts to break out. So we're seeing the same thing over here on the total cryptocurrency market cap, which has just recently reclaimed the $2 trillion mark. Understand these are still very baby numbers in the greater scheme of things when you compare to the stock markets. Stocks like NVIDIA add and subtract $2 trillion on the daily. Just small moves on things like NVIDIA can add and subtract $2 trillion literally like that. It's absolutely unbelievable with the volatility on some of those coins. And the other thing I wanted to mention over here is the monthly funding rates, right? If you look at the monthly funding rates, every time it went negative, these were the various different times. We had the Corona crash bottom that occurred over here. We had the October 2022 period just before we had the biggest rally or streak towards the upside. Then we had, of course, the double top scenario over here where Bitcoin came down on the 21st of June. Then we had the FTX collapse over here. And then recently on the monthly scale, we actually just printed negative funding rates once again. And those mark very, very significant time periods. And I just find it very interesting the way it lines up with that cup and handle formation, with a lot of the altcoins reaching the apex of their falling wedge, with the fear and greed reaching into extreme fear, while I still believe we're still in a bull market, and that presents wonderful buying opportunities. And now you're seeing the same thing with the funding rates, right? So there it is. You can see highlighted on a chart. We have COVID, we have the October pre-rally, we have the dump over there. Look at the funding on the bottom on the weekly scale, also going super negative. We have the FTX collapse marking the exact lows, the USDC depeg over there, the yen cash and carry trade, which led to the recent negative funding. And there it is, weekly funding still negative. Can it go lower? Of course it can go lower if there is more fear, if we do start to go to lower targets. We spoke about the yearly open for Bitcoin, which is around that $42,000 level. That would kind of be a worst case scenario. But I think timing wise, now more or less is when you want to start to look to reposition while the funding has been totally wiped from the market, right? The leverage has been totally wiped from the market. We've spent more than 6 months since there was actually any froth in the market. And that means most of the retail are gone. So these are the 4 essential market phases, and your job as a trader or investor is to identify which phase we're in and how to adequately allocate capital into each of those phases: accumulation, advancement, distribution, and declining phases. These are the 4 phases that form a Wyckoff schematic, right? And we're going to look at the Wyckoff schematic in just a moment. And currently, the question is, where are we? Are we accumulating or are we distributing? We're definitely not advancing or declining. We're in a ranging market at the moment, and it's either number 1 or 3. And if you can adequately depict which one that is and allocate your capital correctly, that is where you are going to make money. All of this is taught in Whale School, by the way. I took this slide from Whale School. So we're looking at the potential for a Wyckoff accumulation schematic, and that would mean we are in phase 1 over here, reaccumulating in preparation for the advancement phase leading into phase 2. That's where we catch those strong trending moves and we make a whole lot of money, right? And then we lead into distribution after that. So accumulation, this is what it would look like. We've recently just likely completed the spring phase, and we're busy moving into the sign of strength phase over here, which means you're transitioning from phase C into phase D. And I'll show you on a real live chart. And how do we know this, right? Well, we've followed a very similar trajectory over here with the selling climax, automatic rally, secondary retest, secondary test in phase B, and then the spring, which is where you sweep the range lows, specifically put on high volume. That is the key point, right? On high volume. And if you go to the chart over here, we'll probably have to go to this one. You can see high volume, right? An outlier volume candle in relation to everything else that's occurred within this trading range. That is pretty significant. So bulls breaking price action back above $57,721, sending your RSI up. We spoke about this. If you can get multiple candle closes above the 9 and the 18 EMA, you'll start to get that cross back towards the upside, the golden cross, right, between the yellow and the pink. We spoke about the 50 MA being potential resistance. We rallied straight through that, closed above, and now this candle is currently back testing that. So if we can continue to close multiple candles now above the 50, then the whole trend starts to shift, and then you can start to target things like the 200, right? So we're above the 200 EMA, but the 200 MA is situated overhead. At the end of the day, clearing above 65K will clear all of those levels of resistance, and that's where you should see the risk come back into the market very, very quickly, and people's optimism will return, and that could also potentially be breaking out of at least the handle formation of that massive cup and handle that I showed you on the weekly and monthly time frame. So we're watching this very, very keenly over here. At the end of the day, we spoke a whole lot about buying the bottom over here, which was the 52K level, and at least taking a chance for the possibility of a high low, which now looks to be the case, right? The high low is there. The question is, do we get a lower high or do we get a higher high? If we do get a higher high, you know, the whole structure has begun to shift, and that is your very, very first sign that we're about to break out. And we've spoken a lot about the timing factors, right? And it's pretty spot on. We spoke about the 6-month corrective phase, and by the 6-month mark, the low should be in. It's more than likely going to be the case that this is the exact low. This wick that came down, to give you the precise low, it was $49,050, and now we're going to slowly grind up, right? We've spoken about the significance of this region over here that I've highlighted in yellow. Again, this is the 6-month mark. This is 160 days post-halving. This is 680 to 685 days since the cycle low. So blue line, 160 days post-halving, and then the orange line, 680 to 685 days since the low. Why am I even telling you this? Why is it significant? Well, if you study the markets and you learn the timing factors, well, this is what you'll find, right? This is just before things start to mark up and head towards the upside. You can see it over here. We're currently situated on the green trajectory, which means we actually below fair value in comparison to what we've seen in the prior post-halving cycles. We're currently situated 146 days post-halving, and we're looking for price to rapidly start to appreciate following that point. Now, you can look at the same thing over here, and you can look at the return on investment, of course, after the exact cycle low. And this is where I got those other numbers from, these ones over here, where I got 680 to 685 days and the significance of those levels. There it is. We caught right in that pocket, and the expectation is we should have rapid price appreciation, just like we did in the prior parts of the cycle, which means for you, if you believe in seasonality, if you believe that September is typically the worst month for both the stock market as well as crypto, and that presents a wonderful opportunity, then the answer should be that September is the time period where you're looking to reaccumulate, similar to what we showcased over here, the reaccumulation phase, the Wyckoff schematic spring phase playing out, and we're looking for a markup into this time period over here, which we've highlighted. By this period, this is where the prior cycles really started to move towards the upside. That would be early October, which means now's the time, right? The window of opportunity is closing, and it's going to be closing very, very, very quickly. So you do want to pay attention to that. Currently, we're still range bound. This is what a range looks like, right? Divided up into a discount and a premium zone. As mentioned, you're looking to reaccumulate in the discount zone, and then you're looking to play it carefully or cautiously as you move into the premium zone. But if price consolidates in a premium zone, this is where big breakouts occur. So you can decrease some of the risk over there. You can start to warrant a little bit of caution as you come into the premium zone, but the discount zone is your support levels, that's your range lows, and that's where you're actually looking to establish your positions, which was over here. This is what we spoke about. We spoke about that a whole lot, right? This was the spring phase, most likely. We still have to await confirmation. This was your spring phase over here. This is the next retest of that range low. This is your discount zone. This is where you wanted to be a buyer. At least we were in 𝗲𝗏. We started to load up on a bunch of positions, and I'm still looking to deploy the rest of my available capital at any moment. We're just waiting for a little bit further signs. You have to ask yourself, are you an aggressive trader or investor, or are you a risk adverse, careful trader or investor? If you're risk adverse and very, very careful, this is what you're waiting for. You're waiting for a break into the premium zone to create the high. You're waiting for the throwback to prove that that price wants to remain in that premium zone. And then that's where you can start to reestablish your positions. It means you'll be entering higher, but it will theoretically be in a bit of a safer position. So that's what you're looking at for Bitcoin. And remember, there's plenty of opportunities to trade the ranges. We'll talk about that in just a moment, to trade this exact range, right? Looking to establish in the discount and take profit in the premium on some of the altcoins. We'll look at that in a moment. If you do want those coins, guys, smash the like button. If you appreciate the show content, please smash the like button. It truly, truly helps to get the show content out there. Remember, YouTube works on an algorithm. So if you tell YouTube you like the video, it will share it with more people. And that way we can get this bull run running sooner rather than later. All right. We do have the deltas over here, which are currently positive on everything except for WIF. WIF is still negative. What this simply means is that, of course, in relation to this, we have more longs opening up right now into resistance. That's what you have to be careful of in the short term. This is more specific to those of you who are trading on a day-to-day basis. The high time frame remains unchanged. Remember that, right? So also taken as an extract over here from the Whale School course. Here's an example of your trading range. This is what it looks like. Remember, you can make money both up and down, right? So this is what compounding an account within a trading range would look like, under the presumption that you can add 10% into a range, right? So 10% profit up, short the market 10% down, add another 10% up, and the compounded effect on that would look like this, right? Starting with $1,000, you would add 10%, giving you $1,100. You then short the market with $1,100, compounding it with another 10%. It takes you to 1,210, and that gain starts to become exponential. By the time that you've done this 8 times in a row, you're sitting at $2,143 capital. And you can do the math. If you just keep doing that, adding 10%, 10%, those small wins over and over, limit your losses as much as possible, but take the small wins as well. They add up. And over time within these trading ranges, which tend to occur for in the region of about 70% of the time, you can make a lot of money. This is taught a lot in Whale School. You'll go through this in the workshops if you haven't already. And we also cover this in Whale Room, right? So current opportunities within the actual real life market would look like this, right? So currently, a lot of specifically the gaming sector is starting to form ranges. They're coming off very, very strong downtrends. Following a strong downtrend, price tends to range for a while before reaccumulating or redistributing. even if it's going to be distribution again for altcoins, it still creates a range after coming down hard, right? So look at the range over here on CDFI as an example. This is the range low. We've hit that level. Your range high will take you up almost 100%. You have these 100% ranges, right? 100% up, 50% down, 100% up, 50% down. Okay, so look at this one over here. Here's super. You can see it came down 56.2%. And if it pushes up into the top side of the range again, that's 127% move. So I haven't highlighted all of them. I just took 3 examples just to show you what the majority of these altcoins look like. This is Nakamoto Games. Same thing over here. Breaks down from the top side of the range, comes to the bottom over there. That's a 50.6% move, moves to the top side of the range. That's a 98.8% move, and currently it's working its way back to the bottom of the range. So these are the kind of trading opportunities that you're looking for. Now, you're not necessarily going to get 8 in a row within one trading range, and that range probably breaks. But on a big time frame like this, on a daily, you can definitely get 2 or 3. And these are not 10% moves. These are 100% moves, right? Without even touching any leverage. So those are some of the opportunities that you actually want to be looking for. And this is what the path to success looks like, right? You want to opt for the right strategy at the right point of the market cycle. You have to survive in order to thrive and succeed in the markets. Survival essentially looks like trading the range, right? There's a lot of chop. There's ups and downs, and it looks like this. You're down 3%, up 4%, down 2%, up 1%. And then eventually you get a big trade and you win. Now, if you're not well versed in the trading markets, you're probably best waiting for a breakout, or at least for confirmation of a reversal of a trend. And then you simply want to just sit and hold all of your spot positions into the top of the market. But if you're pretty seasoned when it comes to the crypto markets, you're going to be looking to trade the range. Just like I showed you, there's opportunities everywhere. If you look for them, you will find them. If you sit and you go through each and every single chart and you ask yourself, is this a range? Is this a trend? Are we in accumulation or distribution? Did I gain a level? Did I lose a level? You'll be able to opt in and find great opportunities and consequently take those trades, right? So for most of you, all that you need to do is spot and chill. What does that mean? This is a common word or phrase used in crypto Twitter. Spot and chill just means that you're going to buy strong positions. You're going to sit on your hand. You're going to put it away on a ledger, and you're going to chill. Speaking of which, I actually got my ledger. I have a whole bunch of ledgers, by the way, guys, but I got my ledger stacks. Please let me know in the YouTube comment section after the show if you want me to do a dedicated video on how to set this up. It comes with a little skin thing over here as well, which is awesome. I still have the old ledgers as well, by the way. So I have all of these, and I have the new one. That one is over here. This is what spot and chill would look like. Literally, all you have to do is get yourself a ledger, put the capital on the ledger, and don't touch it. It's a buy and hold strategy until the end of the crypto cycle. So if you do want this, by the way, there's a link in the description below. Use that because you'll get extra Bitcoin on the ledger when you buy it. If you use that particular link, there it is. Go through to Ledger. As mentioned before, this is really a product that I'm proud to be associated with. Ledger are the best of the best when it comes to security. And at the very least, just get this one, right? This is not in dollar terms. This is in dirham because I'm in the UAE. So this is about $500 for the top of the range one. And this is about $100 for the baby one. And every single person has to have this if you plan on being in crypto long term and you're holding more than a few $1,000s worth of crypto. The other thing that you have to have, protect yourself, get a NordVPN. Get any VPN. It doesn't have to be Nord. We have a partnership with them, which gives you about a 73%. That is 73% discount. So it works out to less than the price of a cappuccino per day. I have my VPN. It's not on right now because it will affect the stream, but here's my VPN. I have it all the time. You can actually add a VPN within a VPN so you can be double protected, not to get hacked. All right, let's continue. Let us continue over here. Let's look at Ethereum. Ethereum against Bitcoin is getting absolutely hammered, still moving towards the downside. And we said, you don't want to count your chickens before they actually hatch. What do I mean? You don't want to buy this until it actually breaks out and reverses the trend, because this could be the trajectory, right? You may move to the low boundary over here, push back up, and this could take a long time. You could go all the way to the bottom of the apex over here, which would be pretty brutal. Timing wise though, I do believe that by December we should see ETH BTC actually outperforming or moving towards the upside, meaning that Ethereum is actually doing better than Bitcoin. We outlined the possibility for worst case scenario, which also full credit to Benjamin Cowan of Into the Cryptoverse, because he highlighted this. What happened with ETH previously when they started to cut interest rates is that ETH had a similar pattern, a wedge over here pushed towards the upside, started to fall back into the previous wedge, which I should probably change this color to pink so it's a bit easier to relate. There we go. So there's your wedge, and it started to break through that wedge as they were cutting interest rates and actually came all the way down, only for ETH to outperform Bitcoin much, much later than the majority of the people thought and believed. So a couple of things that I'm looking at, coins on my watch list. 𝗲𝗡, A0 is one of them, right? Potential bullish power of 3 formation in play. Perfect coming into the wedge over there. Long-term reaccumulation. A power of 3 is a long-term reaccumulation. You have a manipulation phase, which is in my yellow box related to the pink above in the picture. And then you start to break out, right? So I'm watching this very, very closely. Let's see. I'm zooming in on a lower time frame. And, you know, this is theoretically higher trading price action compared to both the closing candles, open and closing candles on the left, as well as the wick low. So we'll watch as this starts to reverse. Maybe, just maybe, you start to put in higher highs and high lows over here, and that could be the deviation of that manipulation phase, and you break back into the bigger range, and then it should be good to go. So that's one of them. Casper's still doing well, right? This has been one of the top performers in Whale Room. We're currently in a long position on this trade right now. There's tons of trades in Whale Room, by the way, guys. These are just some from our other traders, right? Chris Columbus absolutely crushing it. So you have the Bitcoin short into the Bitcoin long. You have Popcat already. I think this one's now sitting at TP2. You have over here Sui also long, compounds the long again on the next high low, continuing towards the upside over there. There's a lot of different trades. You have 315% up on that Popcat trade already. Render up 40% over there from Josh, one of our other traders. He has today's update. So if you want any of these updates, we are coming into resistance. He's seeing the same thing as me. There's the Sui trade, TP2, Popcat, TP2, and we have Bitcoin finally hitting the final TP over there. So well done, bro. Well done to Chris, absolutely crushing it. We also have Farouk. If you are into scalping, this is what scalping looks like, right? A lot of different trade opportunities over here, smaller risk to reward ratios, but a lot of different trade opportunities over there. So a great, great team. Okay, let's look at Solana. How's Solana doing? Solana is starting to push up. It did take a little bit of time, but the expectation is that leading into breakpoint, which is coming up sometime next week, Solana typically does between 20 and 40%. So from the lows, 20 to 40%. Well, 30% would take you into the mid-range. 40% would take you all the way to about $175. There is expectations that there'll be a lot of major announcements over there. Look, I don't have any insider info, so I don't know. All we can do is look at the chart. This was the range low. We're looking for price to push up towards the range high, and then we will reevaluate. Near also in the falling wedge formation, waiting for the break, but is printing a higher low. Injective, very, very similar, right? Starting to breach that. One that is breaching it, by the way, which is Rio. That's one of the trades that we also took in Whale Room. We are up massively on this trade. This one has now broken out from the falling wedge. So you now have confirmation of the breakout. We are already up 50.68% on this trade without leverage. I took this on 5x leverage, so it's a good day. 250% up on that trade already. And this one can absolutely move, right? We said, conservative target is obviously going to be down to here to about $1.44. More aggressive target in terms of the chart patterns and the breakout would be towards the top side, which is going to be coming in. Yeah, the big question is when alt season, right? I know you guys all want to know when alt season. Well, if you look at the altcoin season index, we're still deep in Bitcoin season, and the top performers have been Aave, Tron, XRP, believe it or not. White BTC coin, that is very racist. What is white BTC coin? We have 𝗬𝗎 and we have Casper. These are some of the top performers. A lot of those coins we have been looking at for a long time, right? So big ups to you if you've been holding the top performing coins. Where's Solana on this list? How far has Solana dropped down in recent times? So Solana is, there we go. Solana is sitting over there. Against Bitcoin in recent times is about negative 8.32% against Bitcoin, but will probably bounce back. So as you can see over here, there's still ample opportunity, and if the cycle has about 12 more months left to go, which is my prediction, then you would expect that over the next 12 months is typically where you see altcoins start to move from Bitcoin season into altcoin season, and you start to get those major rallies. So my recommendation to you, my highest recommendation, is going to be protect yourself, guys. Be prepared. Get educated, right? So you can go through to Whale School. This is essentially the topics that are covered. We do risk management, typical support and resistance, candlesticks, chart patterns. I'll show you how to read all of that, how to trade the ranges and trends using some of the, little nuances that are found over the years that work best to look for those deviations. I'll give you moving average strategies, show you how to read and understand the market cycles, how to structure a portfolio. This is vitally important. Should you be concentrated or diversified, and at what points? That's the other thing. At what points of the cycle are you concentrated or diversified? How to read volatility. When are the next big moves coming? This will show you how to anticipate major market moves before they even happen, right? Liquidity, looking at where the market makers are sending price. And then most importantly, what I call the 5-point entry approach, which is trade execution. That's where it all begins and ends, right? Is how do you actually enter into that trade with pinpoint precision, even if you have the area of interest marked out? How do you enter into that trade and execute the trade, without taking on too much risk? All of that is listed in the description below. Get yourself a ledger, get yourself a NordVPN, join Whale School. These are the fundamentals and the basics of making it in the space. So that's it from me. I'll catch all of you on the next show, which is on Monday. I hope you all have a wonderful weekend, and cheers for now, guys.